Today, we're going to be talking about how life insurance works. I hope you enjoy. September is Life Insurance Awareness Month, so we're going to continue on that discussion. Today, we're going to talk about how life insurance works. Life insurance is a mathematical science. It's based on the law of large numbers. So when actuaries get a group of people together, they can tell you based on their age, how many are going to pass away the first year, on average, how many will pass away the second year, and they can do this every year until they deal with the entire group of people. They don't know who it's going to be, but they know how many. So if we took a 45-year-old group of 45-year-old, let's say 1,000 45-year-olds that each wanted to buy $1 million of life insurance coverage, and we knew actuarially that on average, 1 out of 1,000 would pass away in the first year, then they can determine how much premium. Maybe they need to collect $1,000 from each individual so that they can make sure they can pay the claim at the end of the year and turn a profit. Now, sometimes people will ask me, well, how much does life insurance cost? Well, I don't know. My response will be, tell me how long you're going to live, and I'll tell you what it's going to cost. So if we're going to determine the cost, we need to start with life expectancy. So if we looked out at average life expectancy, we know that the insurance company, first of all, average life expectancy is where 50% of that group of people has passed away, but 50% are still alive. So you've got a 50-50 chance of being on either side of the line. You can see my 5 there, 50-50. And we know that the insurance company needs to have collected on average 74% of that face amount. And they may get it in a number of different ways, but they need 74% of that face amount in order to be able to pay their claim. When we look at what's called one standard deviation out, that's where 2/3 of that group of people have passed away, but 1/3 are still living. At that point in time, the insurance company is going to have collected approximately 115% of the face amount. And if we look at the second standard deviation, this is a point where 95% of that group has passed away. In that scenario, now there's still 5% alive. We know that they will have paid approximately 234% of the face amount. So think about this situation. Think about this example. You've been paying $1,000 a year for your insurance. You get along about average life expectancy, and you get a statement from your insurance company that says, congratulations on another year. Here's your annual premium. Your premium due this year is $150,000. Now, are you likely to pay that premium? Probably not. You're probably going to wad it up and throw it away. But what if you just come back from the oncologist and they said, you got 30 days to live? Then are you going to pay the premium? Probably so. So that's what in the insurance industry is called adverse selection. The people who are sick, who are likely to have a claim paid soon, they keep the insurance. The people that are healthy, they drop the insurance. And what happened back in the early 1800s, this is what was occurring, and it ended up causing all insurance companies in America to have to reorganize or restructure. So what they did, they sent into the actuaries and they said, hey, we got to figure out a way to address this adverse selection. So actuaries went and did some studying, and what they did, they came up with, so we got it solved. It's the box. If we can have individuals put money in the box, then the interest that's earned on that money over time will cover the cost of the curve. So that box can be set up where all the money can be put in 1 year. It can be put in 10 years, 20 years, or over your lifetime. But the point being, a set amount of money can be put in the box, and then that takes care of that ever-rising mortality cost. So if you look at it and you think about it, you got really two choices. If you want insurance that's likely to pay a claim or that is going to pay a claim, then you got one of two choices. You can either put money in the box or you can pay the curve. If you've got questions about life insurance or any insurance in general, please don't hesitate to give me a call here at Westside Advisors and Insurance Services. I hope you have a great week.